Welcome to the Trader's Mindset. Let me start with a brutally honest question. If copy trading was truly the golden shortcut to wealth, wouldn't every beginner already be rich by now? Yet statistics scream the opposite. Most people lose money, even when they copy so-called experts. That's because what looks like a safe path is often a silent trap, one that feeds on hidden risks, misplaced trust, and your own psychological blind spots. Stay with me, because in this video, we're going to uncover the dark side of copy trading. By the end, you'll see why blindly following others can quietly blow up your account, and why developing your own trader's mindset is the only real defense. You scroll through a platform, see traders flaunting massive returns, and with a single click, you can mirror their moves. No stress, no need to study charts, no sleepless nights, worrying about entry and exit points. It feels like you found a financial cheat code, but the reality is far from that. When you hand over your money to follow someone else's trades, you're not just copying their strategy, you're inheriting their mindset, their emotional triggers, and their personal level of risk tolerance. Think about that for a moment. The person you're copying may have years of experience handling drawdowns, but you don't. They may be comfortable risking 50% of their account to chase a huge gain. But for you, that same risk could cause panic, emotional trading, and a complete collapse of discipline. This mismatch is where copy trading becomes not a shortcut, but a ticking time bomb. Beware. Let's dig deeper into this mismatch. The European Securities and Markets Authority published a report in 2022 showing that nearly 3/4 of retail traders lose money using copy trading platforms. That's not because the leaders are always incompetent. It's because followers rarely understand what they're actually copying. For instance, a leader may trade aggressively on volatile assets like crypto, fully prepared for wild swing. But when their account goes into a 30% drawdown, the follower, someone with a smaller account and lower risk appetite, panics, disconnects from the strategy, and takes a loss at the worst possible moment. Ironically, the leader may recover weeks later, but the follower is already wiped out. This creates a dangerous cycle where followers hop from one leader to another, constantly chasing success without realizing they're sabotaging themselves. It's not a lack of opportunity, it's a lack of alignment between psychology and risk. In 2021, during the crypto bull run, thousands of new traders on copy platforms rushed to follow influencers who boasted returns of 300% or more. On the surface, it looked like these gurus had cracked the code. But behind the scenes, many were using extreme leverage, sometimes 50x or even 100x, betting on small price moves. When Bitcoin suddenly crashed 30% in a week, these high leverage accounts liquidated instantly, and followers who had blindly copied their trades lost everything in hours. The gurus moved on, rebuilt accounts, and continued promoting themselves. But ordinary traders, regular people with savings they couldn't afford to lose, were left devastated. The painful truth is that copy trading hides these details. You see the results, but not the methods, not the sleepless nights, and definitely not the risks lurking beneath the surface. Psychologists have studied why people fall for this illusion. Nobel Prize-winning economist Daniel Kahneman wrote extensively about how humans are wired to see patterns in randomness. In trading, this means if you see a trader who's been profitable for 6 months straight, your brain convinces you they must be skilled, and that copying them guarantees safety. But markets don't work that way. Success in the short term often comes from luck, leverage, or taking outsized risks that haven't blown up yet. Copy trading feeds this bias by putting glossy performance charts in front of you, encouraging you to trust blind. What you don't realize is that every strategy, no matter how successful it looks, carries hidden risks, and when those risks explode, it's your account on the line, not the platforms, not the influencers, and certainly not the market's responsibility. And this brings us to the uncomfortable reality. Copy trading platforms are not designed to protect you. They're designed to profit from you. They don't make money when you win. They make money when you every copied transaction, every commission, every spread, whether you gain or lose, they still get paid. That's why marketing for copy trading is so slick. They use words like democratizing finance or making Wall Street accessible, but behind the curtain, their real business model depends on constant churn, They need followers to keep chasing leaders, hopping accounts, and generating volume. The result: most traders never build real skills, never develop resilience, and end up burned out and broke. Copy trading doesn't save them, it drains them slowly, one trade at a time. One of the most dangerous illusions in copy trading is the belief that transparency equals safe. Platforms show you flashy dashboards, win rates, monthly gains, number of followers, even risk scores. But what they don't show you is context. A trader with a 90% win rate might be scalping tiny profits with massive hidden exposure. One bad trade can erase months of winning. Another trader with a smooth upward curve could be hiding enormous unrealized losses, holding on to sinking trades while waiting for a miracle rebound. These numbers can seduce you into believing you're making a safe, informed choice, when in reality you're gambling on incomplete data. Just like Instagram influencers who show only their highlights, copy trading profiles are carefully curated to attract followers. And the harsh truth: the more followers a trader has, the more incentive they have to take big reckless bets. Because if it works, their reputation skyrockets. If it fails, it's your account, not theirs, that suffers the most. Another hidden trap is the psychological shift copy trading creates. When you outsource your trades, you also outsource your responsibility. At first, that feels comforting. No stress, no decision-making pressure, someone else is in control. But over time, this mindset erodes your ability to think critically. You stop asking the tough questions. Why is this trade being made? What's the risk to reward? How does this fit into the market cycle? Instead, you become passive, dependent, and emotionally detached, until a major loss snaps you back into reality. Studies in behavioral finance show that when people give up control, they experience less short-term stress, but far more trauma when things go wrong, because they feel powerless. That's exactly what happens in copy trading. You enjoy the illusion of safety during good times, but when the drawdowns hit, the pain feels magnified. Suddenly you're not just losing money, you're losing trust in the very system you relied on. Consider the 2020. When oil prices briefly went negative, many retail traders who were copying energy experts got wiped out. These leaders had positioned themselves aggressively, expecting oil to rebound quickly. Some of them had years of experience and the capital to hold through volatility. But their followers, most had small accounts, zero understanding of futures mechanics, and no tolerance for such massive drawdowns. Within days, thousands of copy accounts blew up. The experts, ironically, recovered in the following months as oil bounced back, but the followers were already out of the game. This event shows the brutal reality. Copy trading magnifies the gap between leader and follower. The leader may survive because they know their own risk capacity. The follower gets crushed because they never understood the real dangers behind the trades. Copy trading doesn't just transfer profits, it transfers exposure, stress, and consequences, whether you're ready for them or not. Experts often highlight this mismatch. In an interview, Dr. Brett Steenbarger, a leading trading psychologist, explained that traders succeed not just because of strategy, but because of self-awareness, the ability to manage risk in ways that fit their personality. Copy trading strips that away. When you copy someone, you're borrowing their strategy without their psychology. You don't know how they handle losing streaks. You don't know if they stay calm during market crashes, or if they double down reckless. You don't know if their past success was the result of discipline or luck. And yet you're betting your money as if you share their mindset. This disconnect is what makes copy trading so dangerous. Strategies are not universal. They're deeply personal. What works for one trader could destroy another. Without self-awareness, you're just an echo of someone else's decisions, and in trading, echoes don't survive long. Let's talk about fees, the silent killer of copy trading account. Even when you copy a successful trader, small costs pile up. Spreads, slippage, platform commissions, performance fees. Imagine copying a trader who makes 20% a year. Sounds great, right? But after paying platform cuts, dealing with slippage from delayed executions, and covering hidden costs, your real profit might shrink to 8% or even turn into a loss if the leader has a bad month. And here's the kicker: leaders are often compensated not for long-term consistency, but for attracting more followers. That creates a conflict of interest. They have every incentive to show off risky, high-return trades that look attractive in the short term, even if they're unsustainable. Meanwhile, you're footing the bill. Over time, these small leaks add up until your account bleeds dry, even if the leader seems to be winning on paper. Imagine logging into your account and seeing a huge drawdown that you didn't even choose. You didn't click buy or sell, yet your balance is melting away. This creates a unique kind of psychological pain called learned helplessness. You feel powerless, like you're strapped into a roller coaster with no control over the brakes. Research in behavioral psychology shows that when people feel powerless, they are more likely to overreact, panic, and make destructive choices. In trading, that might mean rage quitting the strategy, withdrawing at the worst moment, or impulsively switching to another trader in search of safety. Instead of learning resilience, you develop dependency and fear. This cycle erodes confidence, not just in the platform but in yourself. You stop believing you can ever take control of your financial future, and that mindset is the true cost of blind copy trading. Now let's talk about herd mentality. Humans are wired to feel safer in groups. It's part of our survival instinct. Platforms exploit this by showing you the number of followers each trader has, creating the illusion of safety in numbers. If 10,000 people are following someone, it must be safe, right? History is filled with examples where crowds got it disastrously wrong. The dot-com bubble, the housing crash, the crypto mania. In each case, millions followed what looked popular, only to face brutal losses. Copy trading magnifies this effect. You're not just following the herd, you're tying your financial survival to it, and when the herd runs off a cliff, you go down with them. The danger is that by the time you realize the leader isn't as skilled as you thought, the damage is already irreversible. Herd behavior doesn't protect you in markets. It amplifies risk and blinds you to danger. Many of these traders are not making money from trading. They're making money from followers like you. They promote copy trading links because they get paid commissions when you join under them. This creates a dangerous feedback loop. The more they show off risky wins, the more followers they attract, and the more money they make from referrals. But what happens when the trades go bad? They don't show you the losses, the liquidations, or they quietly move on to the next hype while their followers are left holding the bag. This is why regulators in the US and Europe have started cracking down on unlicensed copy trading promotions. It's not just misleading, it's financially devastating for inexperienced traders who can't see past the influencer's lifestyle marketing. In 2021, a popular influencer on Instagram and YouTube gained over 50,000 copy trading followers by posting daily screenshots of 10%. When markets turned, his account collapsed by 70% in 1 month. Most of his followers copied every trade, and many lost their life savings. He deleted his profiles, rebranded under a new name, and returned a few months later with the same tact. Meanwhile, thousands of ordinary traders were left scarred and broke. The lesson? Copy trading doesn't just tie your money to someone else's trades, it ties your future to their integrity, or lack thereof. And in a world where likes and clicks matter more than ethics, that's a dangerous bet to make. The most tragic part is how easily hope turns into despair. New traders join copy platforms full of excitement, convinced they've found a safe way to grow wealth. For a while it works. The account grows, confidence rises, dreams feel within reach. But then the inevitable drawdown comes. The leader takes a risky trade, the market shifts, and suddenly weeks of gains vanish overnight. That emotional whiplash going from hope to panic causes deep psychological scars. Many quit trading altogether, convinced the market is rigged against them. In reality, what failed wasn't trading itself, it was the belief that you could shortcut the process by outsourcing discipline and skill. The truth is harsh but liberating. You cannot copy someone else's mindset. You must build your own. Until you do, every shortcut will eventually become a dead end. Overconfidence is one of the most destructive biases in trading, and copy trading fuels it like gasoline on fire. When you see your account growing because of someone else's trades, it's easy to believe you've figured it out. You start to feel like a professional, even though you haven't actually made a single independent decision. This false sense of security encourages riskier behavior. Maybe you increase the lot size on copied trades, or you stop monitoring your account altogether, convinced that the leader knows what they're doing. But markets are merciless. The moment that leader hits a losing streak, your overconfidence shatters. Traders who suffer this crash often feel betrayed, not just by the leader, but by themselves for believing so blindly. And the emotional damage from that betrayal lingers far longer than the financial loss. Closely tied to overconfidence is the gambler's fallacy, the mistaken belief that if something has happened repeatedly, the opposite must be due. For example, If a copied trader has had 10 winning trades in a row, many followers convince themselves that a loss must be coming, or worse, that the winning streak proves the leader can't fail. Both beliefs are toxic. Markets don't work like roulette wheel. A leader's streak doesn't make future trades safer or riskier. It just reflects past circumstances. Yet copy traders often act emotionally. Some bail out right before a big win. Others pile in heavily, just before a devastating loss. This cycle of second guessing is exhausting, and it's a major reason why followers rarely match the leader's long-term performance. You're not just copying trades, you're copying uncertainty, and layering your own emotions on top of. Another hidden danger lies in what psychologists call confirmation bias. When you choose a trader to copy, you naturally want to believe you made the right decision, so you start filtering information in a way that confirms your choice. If the leader wins, you feel validated. If they lose, you rationalize it as temporary. Platforms encourage this by bombarding you with selective success stories and testimonials. You rarely see the thousands of followers who quietly lost money and left. Instead, you're fed a constant diet of winners to keep your hope alive. This bias blinds you to warning signs, sudden increases in leverage, erratic trading patterns, unexplained losses. By the time you admit the truth, it's often too late. Confirmation bias doesn't just keep you stuck, it actively pushes you deeper into the trap, convincing you to stay loyal long after logic says you should leave. Then there's the sunk cost fallacy, the feeling that because you've already invested time or money, you can't walk away. Many copy traders stay locked into failing leaders for months, because they don't want to waste what they've already lost. They keep hoping for a turnaround, throwing good money after bad. Platforms know this, and design their systems accordingly. They make switching leaders easy, but emotionally difficult. You're shown messages like "don't miss the recovery," or "stay the course" like thousands of other followers. These nudges prey on your reluctance to admit mistakes. But in trading, refusing to cut losses is fatal. The longer you stay attached to a failing strategy, the deeper the hole gets. Copy trading doesn't just exploit your wallet, it exploits your psychology, keeping you locked in loops of hope and denial. Finally, let's talk about the system traps baked into copy trading platforms. Many platforms delay executions, meaning your copied trade may open seconds or even minutes after the leaders. In volatile markets, that small delay can turn a winning entry into a losing one. Slippage and liquidity issues hit followers far harder than leaders, yet they're rarely disclosed up front. On top of that, risk controls like stop-loss mirroring don't always work as expected. If a leader manually exits a position, followers may face lags, taking worse price. In effect, the system is rigged. The leader always has the advantage, and the follower always absorbs the hidden costs. Multiply this across dozens of trades, and you realize the game isn't designed for you to win. It's designed to keep you engaged long enough for the platform and the influencers to profit. You become the liquidity, not the winner. Experts across finance agree on this point. As Warren Buffett famously said, "The best investment you can make is in yourself." Copy trading bypasses this truth by selling the illusion that someone else's skill can substitute for your own. But markets punish dependence. The traders who survive long-term are not those who latch on to others. They're the ones who understand risk, build strategies tailored to their personality, and adapt as conditions change. If you've relied on copy trading before, this isn't a reason to feel ashamed. It's a wake-up call. You don't need to outsource your financial future, you need to take ownership of it. Taking ownership starts with education. That doesn't mean memorizing technical indicators or copying chart patterns blindly. It means understanding how markets actually work. Why does price? What creates trends? How do risk management and position sizing protect your account? Once you start asking these questions, you begin building a foundation no copy system can give you. Brett Steenbarger, one of the most respected trading psychologists, emphasizes that self-awareness is the edge most traders ignore. If you don't know your own risk tolerance, emotional triggers, and decision-making style, no amount of copying will save you. Education builds that awareness, and when you pair knowledge with discipline, you stop looking for saviors and start becoming your own leader. They know how much of their capital they're willing to risk on each trade, and they stick to it no matter what. Copy trading removes this control, leaving you exposed to someone else's risk appetite. But when you set your own rules, whether it's never risking more than 2% per trade, or always using stop losses, you take back power. Risk management isn't glamorous, but it's what keeps traders alive long enough to profit. Without it, trading becomes gambling. With it, trading becomes a calculated pursuit, and that shift is what separates those who burn out from those who build wealth steadily over time. The third step is adopting a long-term mindset. Markets reward patience and punish desperation. Copy trading thrives on desperation, the urge for fast gains, quick fixes, and shortcuts. But if you zoom out, you'll see that real traders treat the game like a marathon, not a sprint. They build consistent routines, track their progress, and learn from mistakes. They understand that trading is not about winning every trade, it's about surviving the losses and compounding the wins. This is why legendary traders, like Paul Tudor Jones, emphasize capital preservation above all else. You don't need to chase 100% rich. You need to protect your account so you can keep playing the game tomorrow, next month, and next year. That's the mindset shift that transforms trading from gambling into a career. So here's the hard truth. Copy trading may feel safe, but in the long run, it's a trap that drains your money, your confidence, and your future. If you want to escape that cycle, you must build your own trader's mindset. Learn the principles, respect risk, and commit to long-term growth. Don't hand over your financial destiny to strangers on a platform. Take control of it yourself. And that's exactly what we're building here on The Trader's Mindset. If this message resonates with you, don't just watch. Subscribe to the channel, share this video with someone who needs to hear the truth, and join a community that's committed to mastering psychology, discipline, and resilience. Because in the end, following others won't make you rich, but mastering yourself just